Just sell the Australian dollar, US dollar at 7145. Okay. Hold on, please. I just sell Australian dollar 7145. That's my entry here. Hold on, please, my traders. Okay. That's there. Sold it. I want to buy also the euro dollar currency pair. Euro dollar. Hold on, please. I'm a bit in a hurry now. Euro dollar euro dollar currency pair. I want to buy the euro dollar. I'm not interested to sell the euro dollar at this point in time. Okay, I'll buy it now. Hold on, please, my friend. Not a good place, but put it here. Let's see, come here. I want to buy. If hold on, please, at 10890. This is if it comes here. This is a limit order. 10890. I want to buy the euro dollar. My friend, hold on, please. Okay, right there, right there, right there. All right, beautiful. Okay. 10890. Moment, please, my friend. Moment, please. Moment, please. What's going on here? I'm going to go now. I will explain to you. Don't worry, my friend. I will tell you why I'm buying the euro, why I'm selling the Australian dollar, US dollar currency pair in a minute. Okay. Too many lines. Okay, I will remove some line here. The title of the video is a nigga Forex Trader. It's a live day trading. As you can see, I'm a bit eager now to buy and sell. So buying the euro dollar and selling the euro dollar. I will explain to you what I'm doing here, so I'm a bit in a hurry. All right, hold on, please. Remove some lines on my chart. And I will explain to you exactly, okay, my tactics, my strategy, my methods, why, okay, I'm buying the euro and why I'm selling the Australian dollar, US dollar currency pair, okay. Okay, these are the lines I dropped before for my previous recording. It's good for traders to see live day trading. So they may get something out of it, or maybe this will help them to improve their trading also, okay? All right, so here we are. I want to do something here. Hold on, please, my friend. As I said to you, I promise I'll explain everything to you in a minute, okay? All right, 1 second, please. Look at that, 138. This level is a magic level, okay? 138.2% Fibonacci extension level. Here it is again, here it is. On the hourly chart. See this tall candle here, price dropped down. We put the Fibonacci extension on it, and the price went down to the 138.2% Fibonacci extension level. All right, if the price is going down and display a low, all right, and rally up, okay, and continue to go down, the first challenge for the bearish trend is the 138.2% Fibonacci extension level. The opposite is also true. In an uptrend, price going up, display a high and pull back. If it breaks above the prior high, the first challenge for the bullish progression is the 138% Fibonacci extension resistance level. All right. So here it is, touch it here, and about the euro, okay, at 10890. Hold on, please, one. Okay. For this trade, I want to use a bigger stop loss because what I want to do, I want to remain in the trade for a long time. I want to give the room for the price to do whatever the price will do, and also I want to get a bigger profit. Okay, let's go back to the Australian dollar, US dollar currency pair, and I will explain to you, okay, also why. Okay, I am selling the Australian dollar, US dollar currency pair. Okay, bear with me. US dollar currency pair. Okay, let's remove some of our previous line. Okay, all right. And this is on the hourly chart. Here it is. You can see you see this stock candle here. Somebody sold it here, it dropped down. Somebody sold it again here, dropped down. Somebody, sold it and cover their track, their footprint. These are sellers. See this candle here? They sold it here, price went down, but they don't want people to know, so they push it back up. Price. This is how you know. Because how do you know that they sold it here? The price formed a double top here. Now price breaks below the nuts. So that's why I'm selling also. They were selling a dollar, US dollar. You see this candle here. Pay attention to this one here. This one here. These are sellers. And these are not ordinary sellers. These are smart sellers. So I don't want to be the first person selling. All right. So you see now, price form a double top right here. So what I'm doing here is a bit aggressive, all right, but I'm quite happy with that. That's why I want to use a bigger stop loss to control, the risk. And I will set my stop loss also, and we'll see. So price form a double top and break below what I like to call the nut. This is what I like to call the nut, this one. Okay, so price dip below the nut, put back, retest it here. Now it's below it. As I'm explaining to you now, I'm a bit in a hurry, a bit eager to enter the trade. I'm rushing into it, but as I'm doing that, I will not violate the 5% money management rules, and I will use, a bigger stop loss. This is my decision. If they take me out, well, it's my decision, and I will not complain at all, All right. So the nut is broken. Double top, the nut is broken. I want to stay a little bit on this candle here, One thing, One thing you have to understand is that the smart money, the hedge fund, the big institution, the mutual funds, the commercial traders do not like the general public to know when they are selling or when they are buying. They are selling gradually, bit by bit. And sometimes the activity can be exposed by the price itself, the number one indicator. Here, this one here, pew, down. Why? Somebody sold it here, it dropped down. If this was not a true selling activity, if this tall candle was a distortion, the price will go back and quickly to correct the distortion. There was no correction here. As the price goes back, you see the orange line here. This is the orange line I want you to pay attention to. All right. So as the price comes near the orange line, which is at the 7170, they sold it again. Boom, down. Look, my friend, look carefully. So they sold it here, drop it down. Price come near the orange line at 7170. They sold it again. Now price slowly. You see here, price gently, blah, 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 blah. They are selling here. They are selling bit by bit, but the price must go up again because they are buying at a specific price. These are sophisticated traders. They don't sell anyhow. They sell at a specific price. So they are selling at 7170. As the price return back gently, you see here, gently. Here, this candle here, you see this candle, the tail. Well, 7170. Boom, they sell it again down. Now this time, they don't want to leave a footprint like they did here and here. So they quickly push it up a bit. This is just the game of the big market players. You can't complain about this. They can't expose their position. Other big market players may trade against them, and they can't afford to do it. They have to protect their position because a lot of money is involved. All right. So that's why they don't want the general public to know. They are not manipulating the market, but that's why sometimes it's not good to tell people what you are doing, all right, in the market. You see on Twitter people saying that, you see sometimes people say, I see on Twitter people say, I just sell euro, I just do this. Don't do that, Don't tell people what you are buying and selling unless they are your friends, All right, So now, because other traders can trade against you, it's happening, So don't be fooled, all right? So now again, price came here, they saw the price went down, they cover it, pure price from a double top, confirming now to us that in fact these are sellers. That's why now you can understand why I'm selling also. And I'm not the first person to sell. I just want to sell with the big boys so they don't get upset with me, okay? All right? All right? You don't want a big boy to slap you, all right? You don't want them to slap you. So here it is from a double top. The knot is broken. I'm selling at a 7145. It makes sense? Okay. That's where the price now. 7145. That's where I sold it. I'm now on the hourly chart. That's why you can't see the first line that I've drawn before. There you see, that's my first line I drawn before. Okay, this one. Okay. If I adjust the new one on it and color it. Somewhere there, okay, my friend, 7145, okay. Selling the Australian dollar. All right, so this line here, I will change the color into pink. That's where the big money was selling. So that's where they were selling, okay. So what I will do, because I sold it at 7145, I will place my stop loss above their selling point. So for that purpose, C45, okay, I will use 30 pips for this trade. So my stop loss, I'll put it a little bit, just a little bit above, okay, their level. Okay, 30 pip at 7175. Okay, that's there. That's my stop loss. Yeah, I'm running out of color it in black. That's the black line there. That's my stop loss. You're using 30 pips for, okay, I was thinking to use a bigger stop loss for this trade, but I'm happy because this stop loss is quite good because it's behind the level where the smart money is selling. So 30 pips is reasonable for day trading. I was thinking to use a bigger stop loss, but I will leave it there, okay? All right, so stop loss set for the Australian dollar, US dollar. Okay, good place, beautiful place to place my stop loss, because if it come in near this level, they will sell again. And I can tell you that this has been going on, in fact, for some time for the Australian dollar. So, in fact, if you have been buying the Australian dollar, it's a big mistake, okay? Right now, it's a big mistake. And, in fact, I will record another video that I'm going to title, okay, how to trade Forex like God. Now, anytime we mention the name of God, traders say, "God, that's a blasphemy. I believe in God and I submit to God." But there are some people who do not believe in God, but there are other comments that come into it. This okay, kind of a title. So remember, this is not a blasphemy, okay? This is if I use the word how to trade Forex like God, I mean how to trade Forex, okay? The best, okay? The best. So it's like knowing everything and making the right decisions consistently. So the word God in this case is just the most powerful person that knows everything, that can make the right decision. So accept the title. So I will be recording a video shortly, and I will title it How to Trade Forex Like God. In that video, what I want to show traders is how to identify the smart money activity in the Forex market. So you see them selling, you want to sell together with the smart money. And I will talk about it, okay? This is about how to trade Forex like God. If I finish to record that video, I will link it to this video and I will put it in the description section. But until that video is recorded and posted on YouTube, you will not see it in the description section. Okay, so be patient, okay? Okay. All right. So the title of the video is a nigga Forex Trader, okay? It's live day trading. Okay. So as you can see, I was a bit eager to enter the trade very fast, because I don't want the price to go too far away before I sell it. You see the tail of this candle. Let's put a line there. 7114. No, I want more profit than that. So Yes, somewhere in this zone, 7087. I will be a little bit conservative. Okay, put it there, 71. Okay, it's even more than that. Okay, it's even more than that. But I will come back to that in a minute. Let's go back to the euro dollar currency pair. By the way, you are wondering whether this is live trading. The time in London is 38 minutes past 1 p.m. In New York, 38 minutes past 8 a.m. on the 5th of November. Remember, the 5th of November. Okay. 38 minutes past 1 in London, 38 minutes past 8 in New York. Okay. In an hour or so, New York will be open. Okay. And probably I will be, okay, recording another video, but the Nasdaq 100 index. Okay. All right. By the way, good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-magdi.com. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. All right. The bottom line is to use the 5% money management rules, all right? So do not violate the 5% money management rules, and always use a stop loss. If you are new traders, open a demo account. It's very good. Now most of the brokers will offer you a demo account. Use the demo account. Practice. Myself, I do practice, okay? Practice, all right? And test your strategy, work on it, okay? And know your trade setup, okay, master them, and then come into the market and also play your game, okay, very, very important, okay. For me, it's very simple. I'm looking for a trading setup. If I do not find a reliable, okay, a viable trading setup, I can have the best signal, but I will not take it. The foundation of the signal is the trading setup. Now, once we see the trading setup, okay, we must validate the trading setup. So you see the trading setup on the 2-hour time frame, on the 4-hour time frame, on the hourly time frame. You want to go to another higher time frame to see the bigger picture. That is it aligning correctly. All right. This is about the validation of the trading setup. Now, another thing that I also say to traders, which is some traders, okay, are still finding difficult to accept, is about the market environment. All right? The market environment, okay? Is the market bearish? Is the market bullish? Is the market volatile? Do we have some volatile economy news that are due? What's going on? The time of the day, okay? Then when we see the market environment, we can now, okay, design, okay, a risk control strategy. All right. But I always talk about organizing a barbecue for your friend. You want to have a sunny weather, a beautiful weather, okay, and a good place to organize your barbecue. The same thing, you want to buy and sell. You want to check the market environment. Sometimes technical traders very often forget to check the market environment. And they can apply the best strategy, but if you're applying the best strategy in the wrong environment, it may not work. Check the market environment, have a feel. Go to forexfactory.com, have a feel about the market. Is it the first week of the month? Is it the last week of the month? All right, you see, last week of the month was a bit volatile because of some economy news talking about, okay, United States. We see the euro drop down during the last week of October. It was a special last week of the month. Normally, the last week of the month is easy week for trading. First week of the month can be challenging because of the high impact economy news. Midweek of the month, we have another economy news, all right? So we want to know where we are, where are we going, what's going on, okay? Because we are not alone in the market, okay? Enough of my blah, blah, blah. Looks like my screen is frozen. I don't believe this. Let's pause the video and I'll come back to it in a minute. Check it out what's going on here, okay? Thank you, traders. It's all okay. It's all beautiful. So we have a double top and the night is broken. I sold it at 7175. Okay, the price now is 7147. Okay, 7147. I sold it at 7145. Okay, stop loss at 7175. Okay, I want to take profit somewhere near the zone of 7087. Okay, somewhere there. Okay. Okay, I'm going to switch my time frame now to go to 5-minute time frame. Okay, here it is. That's my entry. Okay, and my stop loss is the black line here. Okay, so I'm now in this trade, and the price now above my entry. What's going on? Let's go back now to the euro dollar currency pair. Euro dollar, my favorite currency pair. That's my entry. Look at all this going on here. Now we are on the 5-minute time frame, and you see the price is forming a kind of a double top near my entry here, and there is a little bit of knot here for this small double top on the 5-minute time frame. All right, you can see also am I violating the market pattern? Okay, so let's see. I'm a bit eager to enter the trade, so no, I'm not violating. In fact, I sold it almost on the edge of this bearish trend line, so I'm not violating the market pattern. Okay, no, I didn't sell the euro, my friend. I did not sell the euro. I was buying the euro. Attention, please. Bought the euro. Remember, I bought it at 10890. 10890. So the price forming a double top here, and the knot is here. We will see whether now I haven't set up now. This is what I'm talking about. Being eager to enter the trade. And for the euro dollar, I'm going to go to the hourly chart to set my target. Okay. I'm going to use a bigger stop loss for the euro because normally I want to use a 50 pip, 50 pip. That will bring my stop loss at 10840 and 10840. Let's see whether it's good. No, it's not good. Why? You see, I want to place it below this candle here, where the 10840 is before that. So I will place, yes. Okay, I'll place my stop loss at 10832, just a little bit below this candle here. You see this came down with this bullish engulfment here. Okay, so I place my stop loss, quite a big stop loss, more than 50 pip at 10832. All right. So hold on, please. That's it, that's exactly there, okay? 10832, and I'll color it, I'm on the hourly chart, I'll color it into red. That's my stop loss for the euro, and this is my entry here. The orange line is my entry at 10890. Stop loss at 10832. Okay. All right, it's not bad. So I'm now in this trade quite aggressively. All right, but I explained to you we have a Fibonacci retracement, Fibonacci extension 138.2%. You can see price drop down to retest that level. All right, boom. Touch it here, and now it's going back up. I catch it very fast here, quite aggressive. Why is it quite aggressive? Okay, it's quite risky what I'm doing here because I'm an eager Forex trader today. can see that the price is still in a declining channel on the hourly chart. Okay, it's quite aggressive, a bit my entry here. But I'm a little bit here above. Okay, you can see that I'm a little bit above it. Let's go to the 5-minute time frame for the euro dollar. Quite aggressive, that entry there. On the 5-minute time frame, my friend, if we start drawing line on this 5-minute time frame, the first blue line is from the hourly chart. Okay, so on the 5-minute time frame, you may say that I'm out of that declining channel. That's my new blue line on the 5-minute time frame. So it breaks above, okay, this blue line here, pull back, and start going up, and I caught it here. So it's not bad, quite aggressive, but I'm happy with what I'm doing, okay? I'm very, very happy about what I'm doing. I'm going to go back again to the hourly chart. Once again, you can see here that the small money was selling the euro, dropping down, you see here, pure down, okay? Here again, they sold it again, down. This was, okay, the economy news on the 28th of October, okay, right there, and brought the euro down. This is, for me, this is a distortion. One thing you have to understand, if there is a distortion, the price will quickly fill the gap. So, you see the tall candle, this hourly chart, this tall candle here on the hourly chart for the euro, it's a distortion. The price just went boom, 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 up to fill the gap. Now we know that this movement here is a distortion. Price shouldn't go down here. It's a distortion which the market quickly rectified. But after the price hit this point, they were ordered here to sell again. Now they sold it down. Okay? But there is this candle here. Exactly, this candle is very interesting. You have to understand why this candle is so interesting. The price dropped down to the 138.2% Fibonacci extension level. After the distortion, we apply the Fibonacci extension to the distorted candle. All right? Because it's distorted candle, we can look for opportunity to buy at the 138.2% Fibonacci extension level. There is a high chance that after a distortion, and the price goes down to the 138.2% Fibonacci extension level, following the market stable data, this is a distortion. There's a high chance that the euro will continue to go up today. After hitting the 138.2% level, because of this distortion here, the price will find it very difficult to go below, okay, the critical 138.2% Fibonacci extension level. This is a market stable data. Simple. So that's why I was quite excited, as you can feel it this morning, very excited to buy the euro, while other traders are still selling. I feel sorry for them. All right? They should subscribe to our channel. Okay, this is to make your life, okay? All right? Hold on, please. Moment, please. Pause in the video. Thank you, traders. Okay, so we are here. So the euro is going back up. I'm going to go back now. Let's zoom into it, okay? So I'm now in this trade. I set my stop loss for the euro, 58 pips, okay? In trade at 108. I bought the euro at 108.90. Set my stop loss at 108.32, 58 pips. It's not bad, all right? Bullish for the euro. I'm bullish towards the euro, and I want to sell the Australian dollar. Let's bring back the Australian dollar, US dollar currency pair. Okay, it's here. This is the Australian dollar, US dollar currency pair. You have to understand that the Australian dollar, US dollar currency pair, okay, that's a good thing towards them, is positively correlated to the euro dollar currency pair. Now, as the euro is going up, there is a high chance that the Australian dollar, US dollar currency pair may go up. So you may be wondering, George, why are you buying, okay, the euro and selling the Australian dollar, US dollar currency pair, though these two currency pairs are positively correlated? All right? Now, Some traders may say that this is a trading mistake. You may say that, but I'm quite happy with my decision. All right, I'm quite happy. The price now, my stop loss is the black one here. Okay, so at 7175. Okay, so the price approaching again the level of what the smart man is selling. So we will see whether they will sell it down again. Okay, I want to show you something else. Let's go to the monthly chart for the Australian dollar US dollar currency pair that I want to show you quickly here. So looking at this chart, my friend, look, which chart pattern can you see on this chart, on this monthly chart? So I'm trying to explain to you why, though the Australian dollar US dollar currency pair is positively correlated to the euro dollar, I'm buying the euro and selling the Australian dollar. That's what I want to explain to you why. Okay, so look at this chart now. What can you see? Because very often traders look at the chart, they just do not stare at the chart. Do not just stare at it. Okay, look inside the price. Okay, try to understand the message that the price is communicating to you. All right, the price is always telling us something. What the price is telling you. Look at the candlestick bar. Look at the price move. All right. So here it is. Okay, did you see any chart pattern? There is a chart pattern here. Can you see it? There's a big, huge chart pattern here. Okay, now, okay, you get it? Okay, if you haven't noticed it, there is okay, a head and shoulder chart pattern here. This is the big head of our chart pattern on the monthly chart for the Australian dollar US dollar currency pair. This is the left hand side shoulder right here, and right here there is the right hand side shoulder. We have a head and shoulder chart pattern on the monthly chart for the Australian dollar US dollar currency pair. Okay, so the neckline for that head and shoulder pattern is the pink line here that I draw on my chart. I can push it down to this point here, but I don't want to because of this section here. You see the right hand side shoulder. That's why I put it here, my pink line. So some trader may put it here. This is the neckline. Using a concept, how do we set a target for the head and shoulder pattern? We measure, okay, the distance from the top of the head down to the neckline. Okay, that's why we. Is that correct? Okay. This is my, in fact, I have my measuring stick already here that I used before. Here it is. Follow my cursor. I'm going to move it. Okay, from the head, okay, to the neckline, conservative. I didn't go all the way to the top. You can see from here down. That's to the neckline. As the price dip below the neckline of the head and shoulder pattern, we project it down. So there is a high chance that the smart money that was selling on the hourly chart, as I show you, knew about this big head and shoulder chart pattern, and they are selling it down. Anytime it rally up a bit, they are selling. So their ultimate target is 6290. So some trader may say to me, thank you, George, I'm a swing trader. I'll go and sell the Australian dollar US dollar currency pair because, George, I trust you. Do not trust me, okay? Do not trust me. Trust the price and use a top-down trading method, okay? Use a top-down trading method, all right? Use a top-down trading method. So this is a kind of a trading setup, a bearish, huge head and shoulder chart pattern is being formed on the Australian dollar US dollar currency pair on the monthly chart, all right? This pattern, the target, the ultimate greedy bearish target, doesn't mean that the price will definitely hit the target. But we want to know where is the target at least. It's at 6290. From here, down here. That's the ultimate target, 6290. Okay? So we will see whether the smart money will bring it down. If we want to sell, we want to use the top-down trading method and sell on the edge. We want to sell also together with the big market player. That's why, though the Australian dollar US dollar currency pair normally will go up when the euro dollar is also going up, and will go down when the euro dollar also is going down. Both currency pairs are following each other. Okay? The euro dollar currency pair is the leading currency pair for the Australian dollar US dollar currency pair, the pound dollar currency pair, okay, and so on. Okay, so that's why for the first time, okay, I mean today, I decided to sell the Australian dollar and buy the euro dollar currency pair. you have to understand what is happening here, all right? From 2009, okay, the Federal Reserve was busy printing the dollar. The money went into the commodity market. The Australian dollar, US dollar currency pair is a commodity currency pair. Therefore, people were buying the Australian dollar, US dollar currency pair. In fact, at the beginning of this year, I recorded a video at Joe Trio YouTube channel, and I said to trader, give priority to sell signal for the Australian dollar, US dollar currency pair. You remember that video? And all these lines you see on my chart are from that video. Most of them, is you see the key level, professional, buy and sell around key level. So we highlighted those key level for traders, okay? All right. Check out also our channel, the 24 Forex Trader. 24 Forex Trader. This video, in fact, I'll post it at 24 Forex Trader. So if you are watching this video, you are on 24 Forex Trader channel, okay? So this is why, okay, I'm selling the Australian dollar and buying the euro dollar. Normally, I should buy both together and sell both together, okay? Now you see why I'm doing something a little bit abnormal, okay? But right now, you can see that because the euro dollar is going up, okay, generally people will buy together the euro dollar and the Australian dollar. But, okay, that's fine. We will see, okay? Maybe I will lose here, but I will win out there, we'll see. Okay, one of them will be successful by all means, so we'll see, okay? So I'll leave it as it is. I'm not going to move my stop loss today. All right, it's set there behind where the smart man is selling. So if the smart man is not selling anymore, well, I will not sell too. If they take me out, okay, goodbye. All right, let's go back now to the euro dollar currency pair and see whether it's cooking nicely, so to speak. All right. Euro dollar still below my entry point. Okay, what's going on? All right. So I'm going to zoom into it now in a 3-minute time frame. As always, for every live recording, I will have to pause the video at different stages to avoid that the video is too long, because traders don't like long videos. Sometimes they don't like long videos, okay? But the long videos sometimes are very important because we want to put everything in one package, okay, so trader may take it and wrap it up or unwrap it when they are ready, okay? So we are now on the 3-minute chart for the euro dollar. I'm already in this trade, I'm a stop loss set. So there's not much to say anymore. You know why now I'm selling the euro, why I'm buying the euro, my apology, why I'm buying the euro, and why I'm selling the Australian dollar, US dollar currency pair. Okay, so to avoid that the video is too long, I will pause the video. Okay, we are now on the 3-minute time frame. I will put a vertical line at the point where we're going to pause the video. And if they're about to take me out, or if I'm going to get paid, or if something interesting is taking place, I will resume the recording so you may see what is happening here. Okay, so pausing the video for the first time, but before I place a vertical line here for the Australian dollar on the 3-minute time frame. The time in London is 4 minutes past 2 p.m. in New York, 4 minutes past 9. Talking about Aniga Forex Trader is live day trading. You can understand that I'm a bit eager again because I did not wait for New York to open before I place my trade. I'm doing things a little bit crazy today because I'm a bit eager Forex trader, okay? Rushing into the trade. It's not the best thing to do, all right? So you see what I'm doing here, but I'm trying to make the best out of it, okay? Looking for the euro-dollar currency pair. Euro-dollar currency pair. I want to place a vertical line there also on a 3-minute time frame. And we will pause the video and come back to it and see, show you exactly, okay, put it here. That's my vertical line for the euro, and I will color it also in turquoise. Okay, pausing the video for the first time after 39 minutes. Okay, you see now, 39 minutes gone already. If we keep talking, it may be 3 hours video. We don't want that. So let's pause it, okay, and I will come back to it and see, okay, show you what's happening here. So speak to you soon. Let's continue, traders. The time in London is now 57 minutes past 2 p.m. In New York, 57 minutes past 9 a.m. All right, on the 5th of November 2015. Okay, let's see what's happening here. For the euro dollar, you can see that this is my entry here, the orange line at 10890, and the euro is coming down big time. Okay, but I bought the euro today, as I explained to you. I bought it. I'm still in this trade, and my stop loss is at 10832, somewhere below. That's the line here, 10832. That's my stop loss here. So I'm still in this trade, surviving nicely. And let's check the Australian dollar US dollar currency pair. You can see that the Australian dollar US dollar currency pair, we paused the video right here on the 3-minute time frame, and the price went up to touch okay, the zone where the smart money was selling. Okay, they were selling here. I want to show you my stop loss. My stop loss for go to the 50-minute chart. Hopefully, yes, that's my stop loss here. The black line here at 7175. I'm still in this trade. You can see that the price went to touch the level of 7170, where the smart money was selling the Australian dollar US dollar currency pair. What I'm going to do now, I'm going to go back to the 3-minute time frame. I'm going to sell again for the second time. Okay, the Australian dollar US dollar currency pair. In fact, I missed one chance to enter the trade now. Okay, hold on, please. Okay, that's there. I'll place again another limit order here to sell at 7161. 7161, okay? If you come to that level, that order will be filled at 7161. I want to sell again for the second time the Australian dollar US dollar currency pair, okay, at 7175. That's what I call loading it, okay? Loading it, okay? All right. Loading it, okay? Sell again. All right, right there. So waiting for this order to be filled. It's not yet filled. Okay, I'll color this one now into green. That's my limit order there to be filled. It's not yet filled at 7161. Okay, it's not a bad place to sell again. 7161. And for that trade, I'll place my stop loss at 7180, 5 pip above the previous loss. Okay, at 7180, 19 pips. Okay, 19 pip for the second sell. All right. So that's it. I mean, I'm not yet in the second trade, but I'm already in the first trade. Okay. So this is what's going on. So we pause it here. You see that the Australian dollar continue to go up. Okay, up to AC. So what's happening here is confirming to us that the smart money is selling at 7170. Okay, so as you can see, the price, they want to sell again, they want to sell again. This is what I'm telling you. They are selling at a specific price. They brought it exactly at 7170, and we see the first reaction. They sell again. Will they continue to sell? We will see. Okay, will they continue to sell, or is here a profit taking place? Because you can see that the Australian dollar was going down for a long period of time, and are they taking profit now? Will they sell again? We will see. All right, by my stop loss. My second stop loss, let me place it on the chart. It's just above the black line at 7180. That second order is not yet filled. It's still here. Okay, it's still here. Okay. All right. So you want to know exactly what I'm doing here, so you will see clearly on your chart. Okay. So we're waiting for this order to be filled. Hopefully, it will be filled right here, so we can all see that. That will be nice. Come on, don't talk to the chart. Okay. Okay, it's coming. This is a good sign, okay? So they brought it exactly at 7170. They are selling again. So I want to sell again. So you see what I'm doing? I'm selling to, that's it, that's order is filled now at 7161. Second order loaded. So twice I've sold the Australian dollar, US dollar currency pair, okay? All right. So what I'm doing is very simple. Smart money sell. I want to sell together with the smart money. I don't want to be the first person to sell. I'm selling together with the smart money. Okay, the hedge fund, the big institution, the mutual fund, the commercial traders, all right, the professional traders. I want to sell together. Okay, that's what I'm doing at key levels. Okay, all right. So I'm in this trade now. Okay, that's it. Second trade loaded. Okay, stop loss at 7180, 5 pip above the previous stop loss. Let's look at the euro dollar. Okay, let's see whether they want to buy. So I'm going to go to the hourly chart and see again. Pay attention. Have I missed something? So sometimes you enter it. No, I'm happy with this trade. This candle here is giving me a bit of confidence. What may happen is that if the smart money want to buy for the second time, so this, you can see that they bought it here after he went down here and they load it. Okay, if they haven't finished to buy, they may bring it back again in this zone, try to buy again for the second time at a specific price. So if that's the case, I may have to just, if the price coming to close, if they can, if the price, so I will leave my stop loss as it is. I'm using now, okay, 58 pip for this trade for the euro dollar. It's quite huge for day trading, but because I want to give enough time for the price to do what the price wants to do, okay. But if they come quite close to my stop loss, I will just adjust my stop loss a little bit down, okay. So they may buy at exactly the same place as they did before. This candle here, this is the one that is giving me a bit of confidence to, okay, to use that kind of a stop loss for this trade, okay. It's a declaration of the bull. This is a bullish engulfment. Bullish engulfment is a candlestick pattern. That bullish engulfment. Now, I will be recording videos also about candlestick bar because there are a lot of things that have been said on YouTube that are true, but not very clear. So what I will do, I will be recording video about candlestick bar. When I will, okay, put it to traders, okay, we will test it, okay, on a live chat, and I will talk about it more, and I will add my thoughts, okay, to what has been already said on YouTube, on the web, so traders may understand, because very often traders are also using, okay, the bullish candlestick bar, candlestick patterns, like a science, okay? So a bullish engulfment is a bullish candlestick pattern that is usually formed, okay, at a conversion point, at a key support level or key level, okay? So it's not sufficient to recognize, okay, a bullish engulfment and then just jump on it and buy, all right? Where, so we want to know where and when a bullish candlestick bar is formed, when and where a bearish candlestick bar is formed. You want to understand why the candle is formed there, what is happening there, and from there you make your decision. I like this bullish engulfment because it's taking place after a distortion has been corrected and a price dropped down to the critical, okay, support level, which is the 138.2% Fibonacci extension level. A powerful key level if one knows how to use it. I recommend to traders that want to know more about these strategies of 138.2% Fibonacci transfer level to subscribe today to our channel, okay, the Day Pro Traders YouTube channel, www.youtube.com/user/Day Pro Traders, okay, Day Pro Traders YouTube channel, okay. Check it out and subscribe to it, okay. All right. So you may understand clearly exactly, okay, why I'm barking, all right, shouting about this 138.2%. It's not a magic level, but if you know how to use it, you make, okay, powerful decisions, or excellent decisions, or profitable decisions, all right? So we will see, okay? So I'm now in this trade. Will a smart money try to buy again for the second time? That will push the price down, okay? We will see whether they are trying to do that or not, okay? So far, I mean, this trade is not looking good so far, but we give it enough time. We have enough room for the price to do what the price wants to do. So, and then from there, we'll take it out. You have to understand I entered this trade before New York is open, okay? Because of, okay, being a little bit eager for Forex Trader today, this is what is happening here, all right? So we are in the trade. The next thing is to manage the trade, monitor the trade. Have we missed something? If you miss something and we know that, okay, all right, I'm not happy, I missed something, I'm wrong here, close it, shut it down, okay, and move forward, okay? Move forward. But I'm happy with my information here, so I stay put, all right, until I get paid nicely. It's good to get paid. Go back to the Australian dollar, US dollar currency pair. Here we are on the hourly chart. The smart money is, you see, they saw it. I told you, you see this candle. So once I finish to record that video that I promise you how to trade Forex like God, all right, you understand more why these are powerful, okay, signal that we cannot ignore, all right. So they confirm that they have sold it and they hide their footprint. But you see the double top and the nut is broken. They bring it back again. This is what usually happens. Market is open, smart money want to buy or sell again. Price want to goes down, goes up fast, and before coming down. We will see. Okay? We will see whether I get paid or not. All right? We will see. The time in London now is now 8 minutes past 3 p.m. I still got like an hour 30 minutes. Good time for day trading. So good, okay, looking good. Go back to the 3-minute time frame. My friend, my apology to traders. When we are recording live videos, sometimes the video end up being a long videos. So we have been talking now for how long? 51 minutes. Can you believe it? Okay, you are enjoying it, so you didn't even feel it. You didn't feel it. You didn't know that we have been talking now for 50 minutes, so it's good. Keep watching, please, all right? So if you are tired, you can pause the video and then come back or watch it again, and so on and so on, okay? I do that sometimes myself. I watch video on YouTube, and I pause it, okay? Or sometimes if I'm doing something else, if this is a kind of educational video, I may listen to it, and I'm doing something, I'm watching it, and if there is something I need to watch, I'll go back, I watch it, okay, and see it clearly. That's the beauty of video. Powerful instrument. I love YouTube, okay? You can see that. I love YouTube, okay? So Australian dollar, they sold it again there. Now I've sold it together with the smart money for the second time. And I'm in this trade. I'm happy with what's going on here. Okay, they sold it. Now look at that. Look at it. Now I admire this for a second, my friend. Smile, okay? Look at that. They sold it again on the edge, same level, 7170. Let me show you more, okay? So we talk about it. I want to show you more. Okay. I was showing you where were we? Okay, where were we? Let's go back to the hourly chart. Was the hourly? Yeah, on the hourly chart, I'll show you. See. So they sold it here, down. So we say, okay, what's going on? Somebody sold it. Is here a distortion? If it's distortion, if this was a distortion, if this candlestick bar was a distortion, as we have seen for the euro dollar, was a distortion for the euro dollar, all right? Slowly, the price slowly, blah, 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 you close it here. Okay, within a day or two. But it didn't close it within a day. So 28, 29, weekend passed, and the market opened before it come back here. This is not a distortion. Now, not only that, price returned back near that level. They sold it again. Now, price slowly, we are watching. We are watching. Will they sell? Will they sell? Will they sell? Here it is. They sold it, boom, down. And they say, no. We don't want people to know that we are selling now. What have you done? You shouldn't reveal it. So they quickly push it back up. Okay? They are allowed to do that, okay? Right? So now we have a bearish chart pattern, and the nut is broken. And now again, today, on the 5th of November, remember the 5th of November, it's a special day, and again, slowly, gently, they bring it back again, they sell it. You have to understand what is taking place here. If the smart money want to sell for a long term, a medium term, they sell gradually, bit by bit. They are just patient. They want to sell, they keep selling, keep selling, keep selling. Primarily up to that specific price level, sophisticated traders will sell again, invest, will sell gently. This is what's going on here. This is exactly what's going on here. You remember the pattern that I showed you on the monthly chart, that gigantic head and shoulder chart pattern on the monthly chart. You see, sometimes traders miss this kind of information. Boom, boom, boom. The head, the left hand side shoulder, and the right hand side shoulder. If they want to bring it here, somewhere near 6290, we will see whether they're going to bring it there, but they are selling. And the price did not hide it until the music has changed. Then we will not fight it again. But now they are selling. And here it is again. All right, go back to the 3-minute chart for the Australian dollar, US dollar currency pair. So you may be wondering, John, why are you recording all this video? We want traders to see it, okay? What it's about day trading, swing trading, forex market, okay? So we teach and then we want to demonstrate to traders what's going on. We talk about it, market pattern, top-down trading method, market environment. Here it is. Now this is the time to demonstrate what we are preaching, okay? So do not watch it just like a show. Watch it and try to ask questions, okay? Be critical. Say, okay, does it make sense? You have any suggestion? Put in the comment section. You have any question? Okay, you are watching this video. You have any question? Put in the description section, the comment section, George, why, blah, 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 blah. And in due course, we record another video. That's why we are recording more videos. Today, are asking questions, and we are recording video to answer this question. Sometimes traders disagree with us, and they say, George, what you have said before, all right? We have traders, so sometimes we don't hear about them, TST traders, and you will see a few months later, this trader may contact you and say, George, thank you very much, blah, 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 ta, 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 or they ask a question, they say, okay, blah, 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 okay? Of course, not everybody can be happy with us, but okay. This is what's going on. So you have any question, any criticism, put in the comment section. YouTube allow us to do that. And in due course, okay, we do that, okay? Now, let's pay attention for the Australian dollar. We are happy, okay? We need to monitor the euro dollar. So, are they buying? If they are buying again for a second time, I will buy together with this my money again, okay? So, what are they doing? Are they trying to retest the blue line on my 3-minute time frame? If that's the case, okay, I'll buy again with them, okay? But I'll wait for a confirmation. If they're buying again, I'll buy again. Okay, we keep buying together. I let them buy first or sell first, and then we join them. All right? Okay, they like you for that, okay? They like you for that. Because you're not trying to mess up their trade, okay? Okay, my friend, so to control the length of this video, 57 minutes, we have been talking now. Let's pause the video again, my friend. Let's pause it. And I will come back to it. And I will be talking to you. I love to talk to you. And you love to hear me. So let's continue this discussion. So I put my vertical line here for the Australian dollar. That's where we're going to pause the video now. The time in London is 15 minutes past 3 p.m. In New York, 15 minutes past 10 a.m. on the 5th of November, 2015. I will do exactly the same thing for, this is the euro dollar. I will do exactly the same thing for the Australian dollar, US dollar currency pair. I'll move my turquoise vertical line right there. And I will pause the video and we'll come back to it. And I will continue this recording about Aniga Forex Trader is live day trading. Speak to you soon. Pausing the video. Okay, traders, let's check again what's happening here. As you can see, the Australian dollar, US dollar currency pair is rushing down. As we saw it again at 7161. All right, this is the green line here. You can see it's going down. This is where we saw it the first time, so it's now below our first point where we saw it at 7145. I will remain this trade for some time, so I'll give it enough time. You can see there's a support here on the 3-minute time frame. You see here, but I will not going to budge. I'll wait patiently, okay, for more profits. All right, it makes sense, all right, because of the setup. So we want to spend more time on the trading setup, the big, okay, head and shoulder chart pattern on the monthly chart. On the hourly chart, we have noticed that the smart money is selling at 7170. We joined them to sell. Okay, this is what's going on now. It should go down more and continue to go down more, a little bit more, until they stop selling. If they stop selling, the price will also indicate to us that they stop selling. Okay, so far for the Australian dollar, US dollar currency pair, is working beautifully. Let's check for what's happening with the euro dollar currency pair. All right, so it's not good, it's not bad. So you can see us bought the euro dollar currency pair, okay, at 10890. That's my line here, and since then the euro is just going down. Okay, are they trying to buy for the second time? We will see. So if they are buying for the second time, I will join them again and buy the euro for another time. I'll buy it again. Okay, but so far there's no indication for me, so I'll wait patiently. If I see that they are buying again on the edge of this blue line, and the price will indicate that to me. Okay, we see some reaction near the blue line on the edge, so I'll wait patiently and see what's happening here, observing and monitoring the candlestick bar in this session here. There's one here, this candlestick bar, one up, one down. Okay, this one here. So let's put a sign here. See this candle here, this one, these two. Okay, the doji and the inverted, okay, the hammer and the inverted hammer. This one is candlestick bar. Okay, let's wait and see whether the price will go back a bull. Okay, so what I will say, I will place, in fact I will do it now. The price come, give them a bit of hard time. All right, so put it here, right there. Okay, to buy the euro for the second time. That's it, at 10876. This is again a limit order. This order is not yet filled. It will be filled if the euro start going up and reaches this level. This order will be filled. If the order is filled, I'll come back and show you how I'm setting my stop loss. Okay, all right, so this is what's going on now. So we give it a bit of time. So this is about a live day trading. Sometimes we need to wait and wait patiently until we get paid without okay, pushing it too far. Okay, so no bad place to sell the euro for the second time. So leave that limit order there. Okay, and to buy the euro for the second time. Okay, not bad place at all. All right, so this is what's going on here. But now I want to mention something to traders, is that now New York is open. The New York market, the Dow Jones index, the Nasdaq 100 index, if they are bearish, very often the euro dollar will follow suit. So what I'm going to do now, I'm going to check on the Nasdaq 100 and also the Dow Jones index to see what's happening there. All right, so you see the Nasdaq 100 on the 3-minute time frame is rushing down, and the euro is following. Okay, the Nasdaq 100. Okay, so I want to check also the Dow Jones index. Well, I talked about this already at Joe Trio channel. See again, this is the Dow Jones index also coming down. What I'm going to do, just to check something for myself, if you allow me. Okay, I'm going to go, because I'm checking something for the Nasdaq 100. I'm going to go to the weekly chart. Nasdaq 100 burst out of the triangle last time. This triangle here, will it go back inside the triangle and complete? Is this a distortion? We will see. All right, we will see. All right. So you see, this is a resistance zone for the Nasdaq 100. This was I said to traders. You want to sell, you see, it went back to the resistance zone, and now some people are selling that resistance zone. See, the price does not hide anything. Somebody sold it here, boom, 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 down. Price return back to the same zone. If you receive a sell signal in that zone, this is a bearish zone. Okay, give priority to bearish signal in the bearish zone. Very simple, isn't it? Very simple, very simple. All right. Okay, this is what's going on here. That's why the euro is finding it a bit difficult, okay, to go up, because the market is bearish and people are selling the euro dollar together with the major indices. You may say, okay, Joe, we are trading currency. What we have to care about the Dow Jones and the Nasdaq? You have to, okay? You have to. We are trading first the market before anything else. Okay, just to point that one out. Okay, so this is the euro. Are they buying for the second time? So my second limit order is here. So if it goes back, as I told you already, 10876, this order will be filled, and I'll come back and set my stop loss. Okay, so we have been talking now for how long? 1 hour 5 minutes. Can you believe it? It looks like 10 minutes. Yes or no? All right. Okay. Okay. Now I'm going to pause it again. So all right. So put it here. All right. For the euro dollar, my vertical line, we pause it again, and to avoid that the video is too long, the live recording. That's what we do. So the time in London is 47 minutes past 3 p.m. In New York, 47 minutes past 10 a.m. on the 5th of November. Okay. All right. All right, a bit of blah 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 from the Firefox. All right. So what I'm going to do, my friend, let's pause the video, and we'll come back to it and see what's happening. So I did it for the euro because of the Firefox, blah blah blah. I'll have to pause the video now. Okay. So speak to you soon. Let's continue, traders. As you can see, we pause the video here. This is the Australian dollar, US dollar currency pair. On the 3 minutes chart, the price, we saw it again for the second time right here, where I place the green horizontal line here. All right. And then it went down, okay, all the way to the level of 7140. All right. And now the price consolidating here because the time in London now is 18 minutes past 7 p.m. In New York, 18 minutes past 2 p.m. Okay, has been a long time, but I'm still in this trade. I don't want to close it now. So this was happening for the Australian dollar, US dollar currency pair, just to update you about the trade that we are taking and what's going on here. Okay. For the euro dollar currency pair, we bought it, okay, as you can see, at 108.90, all right, and we re-entered it. We bought here. We placed a limit order again right here, where I place this green line here, all right, for the second time. We bought the euro at 10876. That's the line here, 10876. That's where the price is now. This order has been filled. You can see this session here on the 3-minute chart. The price came and touched it here, and this order is now filled. Okay, 108.76. I will now set a stop loss for my second trade for the euro. I will go to the hourly chart to see where is the best place to place my stop loss for this trade. Okay, so for the first trade, you can see that I use a big stop loss, 58 pips. For this trade, 76. I will use a 30 pip for the second trade for the euro, 30 pip, 30. Okay, all right. I think that's reasonable for this trade. Bringing my stop loss at 108.46. So what I'll do, I'll place a line there, 108.46, somewhere in this region, 46, somewhere here. Okay, somewhere here. Okay. 10846 for the euro. That's my stop loss. This one here. The first stop loss was at 10833. That's the red line here. I'll color my second stop loss into pink. Okay. All right, using 30 pips for the second trade. Okay, so I'm happy with this stop loss. You can see that the second stop loss normally should be also below here, but because I'm using more pips for the first trade, I don't want to expose my account too much. So this is what's going on now. Okay, so I'm in this trade 2 times buying the euro and 2 times selling the Australian dollar, US dollar currency pair, okay? Going to go back now because on the 3-minute chart, here we are. Going to move again my vertical line because I need to pause the video again. This is just to update you about what I'm doing here, so you may know exactly how this trend is progressing, okay? So we're going to pause it again. So this for the euro, I'll leave it here, okay? We're expecting the euro to go up and the Australian dollar to go down, okay? So for the Australian dollar, I'm going to move my vertical line right here again. And the time in London is now 22 minutes past 7 p.m. In New York, 22 minutes past 2 p.m. on the 5th of November. The market is now quiet, okay, because it's not the best time for day trading, but because I'm already in this trade and I'm willing to remain in this trade for a while until I get paid, I'll give it a chance, okay, all right, to play it, and we will see whether I'm going to get paid or not, okay, all right. So let's pause the video again, and we will come back to it, okay, when there's something to say. We have been talking now for an hour, 10 minutes, okay? So speak to you soon. Let's continue, traders, just to show you what's happening here. As you can see, we have paused the video here where I placed the vertical line. And since then, the price was consolidating, and just now the price went up here, and then it's coming down. You have to understand that this is the Australian dollar, US dollar currency pair on the 3-minute chart. Going to go to the hourly chart to show you. So we have sold the Australian dollar, US dollar currency pair, okay, at 7145. Okay, 7145. That was okay, the first trade, and using a 30 pip stop loss, we set our stop loss at 7175. Okay, 7175. That's the black line here. Okay. Okay, so we are still in this trade. This is our first stop loss, the black line here, so the price could even come near that level. So and then we sold it again at 7161, and our stop loss is at 7180. That's the blue line here, 7180. All right, right there. That's the blue line here on the hourly charts. And now we are still in this trade. It's working beautifully, okay? It's working beautifully. It's coming down. All right, so nice one, okay? First entry at, okay, 7145. The price now at, this is where we enter the first trade. You see the horizontal line here. Okay, that's the first trade. The second trade is the blue line here. That's the entry for the second trade here. That's the blue line here. And it's working beautifully. At the time in London, you have to understand that this is morning now in London. This is 21 minutes past 1 a.m. in the morning. So we start recording this video since yesterday, showing you step by step, okay, what is happening with this trend, all right, updating, okay, you guys about what's happening here. And we let this trade run because it's a day trade that we are allowed to run, because I will explain to you in a minute why I let this trade run, why I didn't close it, why I just let it run. I will explain it to you in a minute, because I'm expecting a bigger pay. So it has been a bit slow. You can see blah 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 blah, and now it's coming down. Okay, so you see, if you check the date now, it's the 6th of November. So we started during the New York session. Now New York is closed. It's midnight and past midnight. Now it's the 6th of November. So this is what's happening here, okay? So I'm going back to the 3-minute time frame. It's looking good, all right? So second entry, this is the line here, and it's coming down nicely, okay? I want to check on the euro-dollar currency pair. Euro-dollar currency pair, we bought it twice today, okay? So first entry at 10890. So you can see that the price didn't go back to that level since we entered, was struggling. All right, and then we decided to buy it again at 10876, somewhere in this or here. Okay, if I switch my time frame, probably you see on the family tab, because you see this is my blue line. This is my I think this is my second entry. Yeah, this is my second entry at 71. That's it. 10876. 10876. That's our second entry point, okay, for the euro dollar, okay. So we have two trades open. We are still in this trend. If you go to the hourly chart, has been a long day, okay. So here we are on the hourly chart. This is our stop loss. This is my first stop loss, 58 pips at 10832. The second stop loss for the euro dollar is at 10846. Okay, it's the pink line here. That's the pink line here. So nothing to worry about. And we are still in this trend. You just need to go back above our first entry. So we want to allow it to run. Probably we will be taking profit when London is open, all right? So we want to update you guys so you can see. Another thing I need to mention to traders, we go back to the Australian dollar, US dollar currency pair. On the hourly charts, okay, we have this double top, you see here, all right, this double top chart pattern here. We can set a target now for our trade, you see here. So how do we set a target for the double top? We measure, okay, the depth of the double top. So from the neckline, this is the neckline of the double top, and we measure the depth of the double top, okay, so from the top to the neckline, and we project it to the breakdown section. So the greediest bearish target, okay, talking about medium term, somewhere in the zone of 7092, all right. So call it a 7090, okay, in that zone, okay. So that's the target for this trade in normal conditions. Doesn't mean that the price will definitely go there, but we want to know where other traders are likely to place their stop, we want to know where other traders are likely to set their targets, their profit targets, all right. But I'm just monitoring this trade, all right, and I will update you again, okay, and to tell you exactly what's happening here. And sometime during the Asia, this is now the Asia session, we may see some volatile activity. If this is going on, I will let you know what's happening, okay. But I do not recommend the Asia session, okay, to Forex traders. The best time to trade is the London session and the New York session. This video is for educational purposes only. It's neither a solicitation nor an offer to buy or sell any financial instrument, to show traders, okay, how to day trade. Talking about a nigger Forex trader is live day trading, okay. So this is about the Australian dollar US dollar currency pair. Another thing I mentioned earlier is that I said to you that the reason why I let this trend run, why I allow this trade to stay like this, is because of tomorrow, all right. So if you are trading Forex, pay attention to the first week of the month. The first week of the month, you may decide not to trade at all because it can be volatile due to one important economy news that is usually released on the first Friday of each month. Usually, here it is, the non-farm employment change. Okay, I don't want to dwell on this because I talked about it already, all right. You may go to www.stochasticmarket.com, click on Forex Trading Education, or Forex Training, or Forex Trading. This webpage will clarify. Okay, you can also click on today's page at stochasticmarket.com, and non-farm employment change. Before that, okay, it's usually released on the first Friday of each month. It's very volatile, and a lot of traders usually wipe out their trading account and they get into trouble. So tomorrow, this economy news due on the 6th of Friday the 6th. So this is the first Friday of November 2015. You see now? First Friday of the month, 6th of November 2015. And because of that, there are some activities, some preparation that is taking place in the market before the news is released. That's why I allow this trend to run. And until London is open, then I must close this trade somewhere before London is open. All right, so we will see. That's why I let it run, because professional trader will adjust their portfolio, blah blah blah. All right, it's profit taking before that high impact economy news. All right, but before the non-farm employment change, I need to mention to new traders that on the first Wednesday, generally on the first Wednesday of each month, we have Another economy news. That's why I say to trader, if you are a new trader, if you are struggling, better not to trade the first week of the month, and you will save a lot of money just doing that. Okay? Before that, we have what we call the ADP no-farm employment change. It's also volatile. See the red envelope here. The website I'm looking at is www.forexfactory.com. Click on calendar and you'll see all this first week of the month. All right. So thank you for watching. So far so good. All right, I let it run and I want to show you. So it's a long video, but this is for traders that want to learn to trade forex like a professional traders. So for this type of traders, sitting down and watching this type of video is nothing. So because they want to understand everything, and so they may apply it like a professional trader. That's why I'm recording this video. Okay, so I'm going to go back now because I'm going to change time frame now. I'll go to the 10-minute time frame, okay? So we can see more because it's taking so long. If I stay on the 3-minute time frame, you may not see some of the things that I'm talking about. So I'm going to the 10-minute time frame, and I'll move my vertical line right here where I'm going to pause the video. This is for the Australian dollar, and I will do exactly the same thing for the euro dollar. Again, on the 10-minute time frame, my vertical line, I place it right here, and I will pause the video. But before I pause the video again, I'll show you the timing. Here it is, okay, 29 minutes past 1 a.m. again now on the 6th of November. So we have crossed midnight. Now it is 6th of November. In New York is 29 minutes past 8 on Thursday. Okay, so because of the time difference between London and New York, it's 5 hours. So in New York it's still Thursday, but in London it's now Friday. So it's 30 minutes past 8 p.m. in New York. Okay, so pausing the video and I will come back again. Okay, and then maybe I'll let it stay longer, and then I'll come back and just update you about, did I take profit? Have I been kicked out? What have I learned from that? Okay, what have I done right? And then all together we'll learn from each other. Okay, so speak to you soon. Okay, pausing the video after 1 hour 22 minutes. Can you believe it? All right, speak to you soon. But let's continue, traders. As always, the Asian session is all about consolidation. That's why I do not recommend the Asia session to TSTW24 traders. The price is just oscillating at this. We pause the video here. As you can see, it just went up here, coming down. It's oscillating, it's consolidating. What I'm going to do now, okay, I'm going to set a limit order. I'm going to go to the hourly chart, set a limit order to take profit at a specific price. Okay, all right, so time to go to bed. All right, so therefore I will set a limit order to come out of this trade if the price hit this is for the Australian dollar, US dollar currency pair. For the second the second trade that we took at 7161, we sold the Australian dollar at 7161. For that trade, I will expect a 40 pip profit out of that trade. Therefore, I will set my stop loss at 7121. Okay, 7121 to take the first profit. For the second trade that we took, we took at 7161. Okay, so I'm going to set a limit order there. Okay, leave it there. If the price hit that level of 7121, the trade will be automatically closed. All right, so I'm going to call out that line. I'm running out of color now. I'll color it into green. Okay, that's the first target to close the first trade. Okay, at 7121. Okay, that's for the first trade. Hold on, please. Okay. For the second trade, for the first trade, in fact, the first trade that we took for the Australian dollar was at 7145. Okay, I will take another 40 pip for that trade at 7105. 40 pip again for that second trade. So I'm going to set another limit order here at 7105. That's the second trade. To exit the second trade at 7105. Okay, that's the second limit order at 7105 for the second trade. Okay, this is for the Australian dollar, US dollar currency pair. I'm going to go now and look at the euro. I'm going to set again a limit order to come out of my trade. If the price hit that level, I will be coming out of that trade with a nice profit. So the first trade, now I will set the target for the second trade for the euro dollar that we have taken at 10876. Okay, 10876. Once again, let's see, 40 pip will be nice again for that trade also. All right, 40 pip, yeah, reasonable for that trade. Okay, all right, again 40 pip for that trade. 10916 coming out at 10916. Okay, that's the second trade. All right, 40 pip. Okay, I will color that in dark green. That's for the euro. For the second trade, I'll set the target at 10916. All right, it's not bad, 40 pip. For the first trade, which I took at 10890, what I will do, I will not set a target for that. I will leave it open. And let it run. Okay, so this is it. So the second trade for the euro, remember, I set the target at 10916, 40 pips. For the Australian dollar, first trade 40 pip target. Second trade for Australian dollar, 40 pip. Okay, euro dollar, second trade, 40 pip. For the euro dollar, the second trade, we leave it open and we let it run and see whether we'll get a bigger pay for that, because I'm expecting the euro to continue to go up, okay, more, okay. So that's it for, okay, my risk management. This is about risk management and managing the trade, okay. Because of the Asia session, I cannot leave my trade without setting a target, as we are going to the Asia session until London is open. Okay, it's a little bit risky. All right. So going back to the 3-minute in fact, I'll go back to the 10-minute time frame, and now this time I will change my time frame to 15 minutes. So tomorrow, when London is open, we can see all the action here. So I move my turquoise line right here on the 50-minute chart for the euro dollar, and for the Australian dollar, I'll do exactly the same thing, placing my vertical line here on the 15-minute chart. Okay, that's it, traders. I'll speak to you when London is open tomorrow, when I'm about to take profit, okay, to wrap it up. Thank you for watching, and I will speak to you very shortly. Pausing the video, okay, until London is open, okay, tomorrow, okay? Speak to you soon. Hello, traders. Let's continue with this recording. I'm still in this trade because I decided not to close it as London did open. So since yesterday, all right, the 5th of this is, I'll put a vertical line there. That's the 5th of November 2015. We are in this trade. Going to call it in red, okay, the red vertical line, the 5th of November. Now today is the 6th of November. We are still in this trade. You can see for the Australian dollar, US dollar currency pair, the smart money is still selling near the 7170. You can see that the price went to touch the 7170. They sold it down. Again today on the 6th of November, they brought it to the exact level, 7170. Did you forget? Okay, let me show you again. All right. So this candlestick, you see here, this one, where they sold it and hide their footprint. That's what they are selling. You see here. So they brought it there again. They are selling exactly there, exactly there. So that's why I didn't close this trade, though in few minutes, all right, we have, okay, a very high impact economy news, the no-farm employment change, all right? So if you are a new trader, okay, and you never heard about the no-farm employment change, or you don't know what to do with it, all I will say to you, do not trade the first week of each month, or do not trade the first Friday of each month, and you will be all right, okay? You will save a lot of money, okay? So here it is. It's coming in a few minutes because it's 8:30 a.m. This is New York time, 8:30 a.m. Eastern time. That's 1:30 p.m. in London. So here it is. All right. In London, it's 22 minutes past 1 p.m. So in few minutes, we will have the non-farm employment change, a huge volatility, and you will see how. That's why I leave this trade open. You will see a lot of a tall candle. You can see a long tall candle, probably going ups and down, shaking the market. And some traders that are only technical traders will lose a lot of money. And I do not recommend to trader to be a technical trader alone, but combine the technical analysis with the fundamental, checking the market environment to apply the best strategy to the current market environment, okay? So for this trade that I've took since yesterday, it's a day trade in fact, but as you can see, the price did not go far. It was just going up and down. I could have closed one trade that was in profit like 20 pips, but didn't want to take 20 pips for the trouble that that takes. So I'm exposing myself for a little bit of risk, but I'll leave it as it is. We'll see how this will play, because the euro-dollar trade is hedging, in fact, my Australian dollar trade. So that's why I decided to leave it as it is. And also, I'm following the 5% money management rules. So my stop loss, my first stop loss, okay, for this trade, it was at 7175. For the second trade, was at 71, where is the line? Probably on 3-minute time frame, I put it there. Was at 7180 for the second trade. So these are very close. It's not far from the place where the smart man is selling the Australian dollar, US dollar currency pair. So that's it. For the euro dollar did not go. It's just going down. You see here. That's why I sold it for the first time at 717. We sold it at 10890. That's the orange line here, 10890. All right, that's where we sold the euro for the first time. And since then, as you can see, I'll put another vertical line there, a red vertical line. So the 5th of November, see here. Okay, we sold it and it just didn't go even above where we bought it. In fact, we bought the euro, we didn't sell the euro, we bought it, okay, at 10890. We sold the Australian dollar and we bought the euro. So the euro did not go up very much. This is because of the impending high impact economy news that is due very shortly. So keep watching, you will see some tall candle here very shortly. And I bought the euro twice. The second time at 10876. All right, and I think that's the line here. This is my second buy here. Okay, somewhere it's at exactly at 10876. I bought it, okay, and the stop loss, first stop loss at I used 58 pips for that trade, for the euro dollar, for the first trade. All right, so this is my first stop loss right here, as you can see. All right, is there for the euro, and I'm a bit. I can say that I'm a bit disappointed for the euro because it didn't move very fast. So this is just because of this economy news coming up soon. So first stop loss at 10832. That's the red line there for the euro dollar. All right. I also, for the second stop loss, it's at 10846. 10846, that's the peak line here. All right. And also I did set a target for all my trade except for one trade for the Australian dollar to take profit, but the price did not go there. So what I will do now, I will have to remove my profit taking targets. So I remove my limit order to take profit during the Asia session. I don't need them anymore. So because I'm here now watching the price. So Australian dollar. I'll remove also my limit order to take profits. All right, remove them. And now all we are waiting for is the economy news, okay? So going to the Forex Factory, I'm going to go there now. Here we are, this is it, the 8:30 a.m. Eastern Time. Let's refresh Forex Factory. You see, when you see the green one like this, you know that you see that it's coming up soon. Okay, I want to hit on the non-farm employment change. It's not yet out. Should be out in a second, okay? That's it. Very bullish for the dollar. You see, 271, job creation. So for that euro trade, I can forget it. This is the Australian dollar. You see how it come down big time? Nice 1.7. So what I will do, I'll close my second trade now at 7. Okay, 7. That is gone now. Okay, that's it. I'm out of my Australian dollar trade. All of them. First one at 7. Okay, 090. Second one 709. That's it. It's done. Done. I'm out of my Australian trade. Boom. Out. Beautiful. Alright. It's not bad. It's not bad. It's not bad. For the euro trade, I can forget it. It's gone. That's gone. Losing trade. That's it. It's losing trade. See euro dollar. Boom. Kaput. This is a losing trade here. Alright. So it's not bad trade. It's not bad trade. Balance nicely, okay? This is a losing trade for the euro because of, you see how the high impact economy news can change the dynamics of the market right here. All right, beautiful. All right, it's not bad trade at all. All right. So let's click on the other one. We have other economy news here, as you can see. That's it. For the US dollar, very bullish today. You see, average hourly earnings also bullish. The forecast was 0.2. Here we have 0.4. Forecast for the job creation, 181,000 job creation forecast, but we have 271,000 bullish for the dollar. But it doesn't mean that whenever we have a bullish news, the price will be, the price also will be bullish. All right. Sometimes you can have bullish news, but you will see the opposite reaction. Okay, in the market. Okay. All right. Canada, you see Canada employment change. Okay. Also, excellent job creation in North America. Very good. Okay. Unemployment rates going down. Unemployment rate is going down, which is bullish for the Canadian dollar. Okay. So here we are. Okay. Yeah, for the unemployment rates did not change for the US. So the forecast was equal to the actual figure, better than the previous figure. Okay, so this is it. So do not forget this non-farm employment change, which is now. If you go back again, you can see that we have a lot of tall candle. I've been kicked out of my euro trade. Okay, it's not too bad. It's not too bad. But I was rewarded nicely with the Australian dollar, US dollar currency pair. Okay, it's no bad trade. Coming out, okay, at 7090. Okay, beautiful trade. All right. First trade we took for the Australian dollar. Took it at what am I? Okay, took it first. First trade was not a good place at 7145. Was not at a good place. All right, it's not a bad place. It's not a bad place. Took yes, 55 pip out of that first trade. Second trade was much better. That's not bad. That's not bad. That's not bad. Okay, second trade at 71 pips. That's not bad. In total, 7. It's not bad. It's not bad at all. Yeah, it's not bad. 126 pips out of the Australian dollar. For the euro dollar, so 126 pips for the Australian dollar and loss for the euro. The first trade for the euro 10876, stop loss 30 pips, 58 pips. That's okay, it's not bad. 88 pips loss for the euro. Okay, 88 pip loss, 126 gain for the Australian dollar. It balanced very well. You can see that that this is why I left the trade open, though I knew that there is a risk in this trade due to this high impact economy news. So this morning when London was open, I was expecting some price action to come out of my trade before this high impact news, but there was no action in the market at all. The market was very, very prudent because of that high impact news. The market was, the forex traders were preparing themselves, the professionals were adjusting their portfolio, getting themselves ready for this high impact economy news. So it was all about consolidation. Okay, if you look carefully, I'll go to the 15-minute chart. You can see that since yesterday, you see the price is just oscillating. For the euro was just oscillating, going up to the 10890 and coming down. And this was going on for 2 days almost. You see, since in fact the 4th. The price was just stuck between that zone of 10890 and the zone of 10840. And now, because the market was expecting a high impact economy news, and now that the news is released, it was very, very bullish for the US dollar. Therefore, the euro was weakening against the US dollar. Therefore, we see the euro dollar crashing down right here. All right, crashing down. Okay, big time. So that's it for this trade. Lost 88 pips for the euro. Well, it happens, and 126 pip for, all right, gain 126 pips for the Australian dollar. Now you have to understand that these two currency pair goes normally in the same direction, and so if the euro is going up in normal market condition, all right, the euro will go up together with the Australian dollar US dollar currency pair. Now, due to the trading sector that we have identified, we have set two strategies. It was not, okay, in fact, a hedging strategy. We were just trading, okay, the price. We see that gigantic, okay, bearish, okay, chart pattern on the monthly chart of the Australian dollar US dollar currency pair. For the euro, the price was retesting the level of 138.2% Fibonacci retracement level. This is not a normal market environment, so the economy news has changed now the dynamics of the market. What should we do now? Okay, I'll tell you now in a minute. Okay, hold on please. I'm looking. Where is the Australian dollar? Okay, so here it is still going down, the Australian dollar, because the market was selling, in fact, the Australian dollar, and the economy news has also helped those who were selling. Okay, so the price continued to go down more. You can see that it's now at 7070. If I left my trade open, I came out at 7090 right here, very fast. So if I left my trade, if I let it run, okay, it should go down there. But what's happening here? I'm going to go now. Okay, show you now. Let's see what's happening for the Australian dollar. I'm going to go to the monthly chart. We are not even close to the ultimate bearish greedy target of 6290. So there is room for this Australian dollar to continue to go down, but it will not continue to go down the whole day today. All right. So what we will expect next week is a bit of rally up, and then we take it from there on the edge, paying attention to the euro dollar, of course, because these two currency pairs are positively correlated. Okay. All right. Okay, so here we are, we see now, so this is it. Okay, so we are expecting it to continue to go down, but we must have a rally up, and then we sell high, okay, and buy low. Okay, so we will see what's going to happen here. For the euro dollar, is the reverse, so the euro is offering us now. Okay, so the market will continue to sell the euro, but I don't want to sell the euro very much, okay? I don't want to sell the euro very much. We will see next week whether we'll have another opportunity to buy. If we have another opportunity to buy the euro, okay, I will record another video to show you what we are doing here, okay? Okay, that's it for this long video. Has been a long video. During the first week of the month, you see how it was a bit challenging, all right, for this trade. It was not easy trade, all right? And I have to, for a day trade to stay open for this period, it's a challenging. But all in all, we have managed the risk very well. Okay, it was a profitable trade altogether, one losing trade, one winning trade. But the winning trade was bigger than the losing trade. So all in all, it's worth, okay, the effort. But we have to clarify here that what we have done to summarize this video, we have worked with a trading setup, okay. For the euro, we see the trading setup on the hourly chart. A distortion has been rectified. Price continuing to go down to retest the 138% Fibonacci extension level, which is a critical level for a bearish progression, because a distortion has been corrected. There was a high chance that the euro may go up, but due to the high impact economy news that is due today, the market was not willing to expose themselves, so there was no reaction. That's why this trade ended up being a losing trade now. Okay, we will re-examine, okay, what has happened. It was clear that we are exposing ourselves to a risk, because normally, as I said to you yesterday night, we should have closed the trade as London is open today. But because we did not have any reaction, we don't want to close the two trade, or the euro and the Australian trade, for a losing trade. We can't afford to do that. Okay, we don't want to lose for the euro and the Australian dollar. We can't do that. So therefore, these two trades were balancing each other, were hedging each other. Therefore, we leave it open. As you can see, both currency pairs went down together, okay, after the economy news. So because we were buying the euro and selling the Australian dollar, it didn't make any sense this morning to close both trades with a loss. Doesn't make any sense at all. It's crazy. One cannot do that, because these two trades were balancing each other. These are two currency pairs that are positively correlated. Therefore, we left the two trades open. As you can see, one was a losing trade, one was a winning trade, because both trades went in the opposite direction, and we were buying one and was selling another. So it was a hedging, okay. For hedging reasons, we left these two trades open beyond, okay, the time when London did open today on the 6th of November 2015. It looks to me that the euro has a more chance to go up. So if we buy the euro now, this will be a speculative buy, because it's a reaction due to the economy news. But we shouldn't forget our trading setup that was at 138.2% Fibonacci retracement level. For a reaction at this, it's better to go away, all right, and let the market play it, okay, until New York is open on Monday. That's the best approach. Be patient, let the market flow, and then allow New York to open on Monday, and then come in again and examine exactly what is taking place. All right? For the Australian dollar, US dollar currency pair, we see a gigantic, bearish chart pattern on the monthly charts. That pattern is still in place. The news has helped the trade. Now you can see that they were selling at 7170, as I told you before, and that's what they did. And now the news was helping these traders, and it went down big time. Okay, it went down big time. Okay, that's good, because the trade was in the dark. The news, has helped the trade. That was a bearish trade setup on the monthly chart. So remember, we are using a trading setup. Without a valid trading setup, there is no winning trade. Never no winning trade. So if one goes and take a signal and do whatever, uses stochastic RSI, but one does not have a trading setup, one is just playing around, going round, you will change your trading, you will change the setting of your indicator, you will buy hundreds of trading systems, and it's not going to work. Okay, the trading setup is number one, then the signal, and then the low risk entry point. And then once you enter the trade, you must manage the trade. You see, it was not easy. Manage the trade, control the risk, and you should know when to bail out. So this morning I was thinking to bail myself out, but I noticed that, okay, no, I can't bail myself out yet, because we can't close both trade on losing trade. Should leave them open. One will become a losing trade, definitely, and one will become a winning trade. All right. So this is about risk control. The bottom line is 5% money management rules. Okay, and managing the trade one step at a time. Paying attention to the economy news. It's the first week of the month, very challenging week, but we survived, which was great. Okay. So I hope you learned something from these long videos. I'll allow it to run. Normally I should cut it down, but I allow it to run so tell them see exactly, all the blah, 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 the thing that we go through. Maybe something may click for you and will help your Forex trading. Okay? All right? So this is the end of this video, almost 2 hours recording. Okay? All right? Talking about Aniga Forex Trader is live day trading. Okay, was entered the trade very fast and was a bit eager to enter the trade to take a profit very fast before this high impact economy news. Was stuck with it for almost a day, but at the end, was not too bad. Could be messier than this. Okay. If you like this video, please give us the thumbs up. If you dislike it, please give us the thumbs down. Okay. If you love it, all right, feel free to share it on Google+, on Twitter, and also on Facebook. If you have any suggestion, put in the comment section. You want us to talk about another video, all right, put it in the comment section, all right. And in due course, if you want us to record another video, we'll record it. In due course, we put in the comment section, and in due course we record another video to answer your questions. Okay, until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about Aniga Forex Trader is live a day trading. Has been a long video, my apology to traders, but this is what's happened when one is recording a live video. Thank you for watching, and we will speak to you very soon. Happy trading to you all.